In this video, we're going to discuss what is a firm order ticket and the differences between a firm order ticket and other types of tickets or market orders. It's basically a limit order that's binding to buy shares of a company at certain terms. So the firm order ticket we have up on the window has a buy for Databricks, for common shares, $100 a share. The broker commission is always displayed in share dollars. So if it's $100 a share, the broker commission was $2, it would be 2%, but you can't put 2% in a ticket. Is it all or none? That means, do you want to buy the whole block of stock, or are you willing to accept a smaller quantity? The effective date is the date you want the order to be in effect. So if you want it to be immediate, you would put today's date. Whether it's solicited or unsolicited, are you a company insider and some other things? Then you sign it and submit it, and when you do that, it's effectively like a limit order in the market. You are bound to buy, in this case, Databricks stock, common at $100 a share, quantity 10,000. If a seller hits your bid, you are obligated to buy the shares at that price, and if you do not buy it, there is a penalty. So that's the difference between an indication of interest and a firm order. In the case of a firm order, you are going to be penalized if you fail. On the flip side, you are going to be guaranteed execution if you're competing against, let's say, other buyers who only have indications of interest. The firm order is going to get the order. So you have better fills, and if you really want to buy a stock, a firm order is the way to go. In public markets, all orders are firm. So there's not something like an indication of interest for Apple stock. You either buy it or you don't. You can put in a limit order below the market price, or you can put in an order to buy, let's say, shares way off market, but all orders in public markets are binding. And public markets are mostly secondary markets. So in private markets, mostly they're primary markets. In a primary market, the company or the issuer collects the funds raised. In a secondary market transaction, the seller is not the company themselves, not the issuer. So the seller is going to receive the funds or the proceeds from the transaction. The seller is usually a shareholder in a secondary market transaction. This has been a short video explaining what is a buyer firm order ticket. A seller firm order ticket is basically the same thing. It's just an order to sell and a little bit of info about private and public markets. We look forward to seeing you in the next video. Have a great day.